The 30% tariff on South African exports to the US was a heavy blow, with many concerned about the impact on industry and jobs. But a month later, trade stats for September showed a surplus due to lower imports and higher exports, the bulk of which came from mining and agriculture, resulting in a trade surplus of almost $1.3 billion, according to the South African Revenue Service.
Being the most industrialized nation on the African continent, investment comes in. It allows us to be able to have partnerships with the likes of China, the Gulf, even the US.
Everyone thought South Africa was about to take a massive hit from US tariffs. But instead, the world watched a shocking twist. While global powers tightened trade barriers, South Africa pulled off a $1.3 billion export triumph, and nobody saw it coming. This is the story of how a nation turned pressure into power and outsmarted one of the biggest economies on Earth.
In the dense, shifting arena of global commerce, where every tariff feels like a punch and every negotiation resembles a chess match played under floodlights, few expected South Africa to emerge as one of the year's most surprising trade champions. When the United States imposed a slate of steep tariffs that threatened to choke off several of South Africa's most valuable export sectors, economists forecast turbulence, contraction, and a painful restructuring. But instead, something unexpected happened. South Africa did not shrink. It surged, and the world watched as a developing nation transformed pressure into opportunity, turning a trade threat into a staggering $1.3 billion export victory that few saw coming. At first, the story looked familiar. A large economic power deploying protective tariffs, a mid-sized emerging market bracing for impact. Companies across South Africa feared the worst as U.S. duties surged on agricultural goods, metals, and niche manufacturing categories. For years, trade between the two nations had rested on a fragile balance, with preferential access and bilateral agreements acting as the stabilizing pillars. When those pillars shook, the assumption was that South Africa's export corridors would wobble, buckle, and perhaps collapse. But inside the boardrooms of some of the country's largest export-oriented companies, a different kind of energy was building, a mix of determination, urgency, and strategic creativity. Instead of retreating, companies accelerated investment into supply chain repositioning, product diversification, and market scouting. They mapped where U.S. tariffs created openings in other regions, tracked where competitors were failing to adjust, and pivoted toward global markets that were hungry for what South Africa could supply. It was a quiet, calculated counteroffensive, and it was just beginning. The first wave of the turnaround came from the mining and minerals sector. Tariffs had reshuffled global flows of metals and rare materials, and as buyers in Asia and Europe sought dependable suppliers willing to lock into long-term contracts, South African companies stepped into the spotlight. They offered consistent output, competitive pricing, and a logistical ecosystem capable of scaling quickly. While the U.S. market tightened, other regions expanded, pulling South African exports into new territories and strengthening partnerships that had once been considered secondary. Agricultural exporters followed. Facing tariff barriers in the United States, fruit producers, wine companies, and processed food manufacturers embarked on an aggressive redirection campaign. Markets in the Middle East, Southeast Asia, and parts of Latin America opened dramatically, attracted by South Africa's track record of food safety, quality certification, and supply consistency. What could have been a contraction turned into an expansion as demand surged, and trade partners previously considered secondary became major importers almost overnight. Then came the manufacturing sector, the unexpected hero of the story. When tariffs made certain goods less competitive in the U.S., South African companies leaned into innovation. They upgraded machinery, improved automation, and bundled services with products to deliver value beyond the price tag. The narrative shifted from, "Can South Africa remain competitive?" to "How did South Africa get ahead so quickly?" By the time the first trade cycle data was released, the numbers showed a phenomenon few analysts had anticipated. Instead of shrinking, South Africa's manufacturing exports had expanded, tapping into markets where tariff-altered supply gaps needed urgent filling. The success did not materialize by chance. It emerged from deliberate, calculated decisions. Companies studied global trends, identified supply gaps, and positioned themselves to move fast. When other nations were still adjusting to the ripple effects of U.S. tariff policy, South Africa had already begun to reconfigure its logistical networks, negotiate new shipping routes, and deepen ties with emerging markets looking for dependable partners. Central to the drama was the role of global market volatility. As prices fluctuated and trade corridors shifted, South Africa's diversified export portfolio became a strategic shield. Instead of relying heavily on one sector or one country, businesses balanced their exposure across continents. This flexibility, combined with a willingness to take measured risks, turned what should have been a financial downturn into a moment of unexpected leverage. Even major multinational companies took notice. Some began sourcing more raw materials from South Africa, viewing it as a stable anchor in a period of worldwide trade turbulence. Others expanded their regional partnerships, engaging South African firms as suppliers or co-developing products destined for new global markets. The country's export ecosystem evolved from reactive to proactive, building momentum with each passing quarter. Yet behind every success story lies a conflict, and this one was marked by escalating trade tension. The U.S. tariff strategy, aimed at protecting domestic industries, inadvertently catalyzed a wave of diversification among its trading partners. In South Africa's case, the pressure pushed companies to broaden their horizons faster than they would have otherwise. The move may have reduced reliance on U.S. consumer markets, but it also strengthened South Africa's global footprint. The geopolitical implications were immediate. Regional blocs across Africa began to explore deeper integration with South African supply chains, recognizing that stronger connectivity could amplify their own bargaining power in international negotiations. The victory emboldened discussions within continental institutions about self-reliance, South-South cooperation, and the importance of cultivating intra-African industrial corridors capable of weathering external shocks. Internationally, analysts questioned whether the U.S. tariff approach had backfired by accelerating global realignments. Some speculated that the trade shock would encourage other countries to follow South Africa's lead, diversifying aggressively, hedging against uncertainty, and restructuring their logistics around new global patterns. If South Africa's $1.3 billion success became a blueprint, the long-term effect could reshape trade strategies far beyond Africa. Meanwhile, South African companies continued refining their advantage. They invested in green logistics, lower-emission shipping, and digital tools that improved supply chain visibility. These moves made them more attractive to environmentally conscious markets, particularly in Europe, where sustainability standards were climbing at an unprecedented pace. Rather than viewing the tariff crisis as a narrow trade issue, businesses treated it as a catalyst for modernization, a chance to future-proof operations, enter high-value markets, and align with global regulatory trends. One of the most dramatic turns in the story came from the technology sector. As manufacturers digitized their supply lines and exporters embraced real-time data analytics, South Africa's operational efficiency improved. Companies could track product movement across continents, forecast disruptions, and adjust strategies mid-route. This new agility gave South Africa an edge over competitors that were slower to adopt these tools. The transformation added not just to export capacity, but to confidence. The confidence to pursue new trade relationships, negotiate better terms, and expand into markets previously considered out of reach. The ripple effects extended into regional politics. Countries throughout the Southern African Development Community began reassessing how they could benefit from South Africa's newfound momentum. Some explored coordinated export strategies, shared infrastructure investments, or collaborative agreements designed to build collective resilience against major power economic shocks. The $1.3 billion success became more than a financial statistic. It became a symbol of what coordinated strategy and rapid adaptation could achieve. Even as praise mounted, questions lingered. Would the growth be sustainable? Could South Africa maintain its advantage if global tariffs shifted again? Analysts debated the long-term trajectory, but early indicators suggested that the gains were not simply the result of temporary conditions. The shift in market relationships, the technological upgrades, and the diversification of trade routes all pointed to a structural evolution, one that would likely outlast the initial tariff shock. Meanwhile, the United States faced its own set of challenges. Companies that once relied heavily on South African imports began exploring alternative sourcing strategies, but many found that replacing South African products was more difficult than expected. The country's combination of quality, reliability, and competitive pricing made it a formidable player in markets requiring consistent supply. As U.S. buyers adjusted, the broader question emerged: would the long-term result of the tariff strategy be protection or displacement? On the African continent, the victory energized economic discussions. Policymakers and companies alike recognized the importance of agility in international trade. The lesson was clear: when global pressures mount, the countries that adapt fastest win. South Africa had demonstrated that emerging economies could not only withstand major power trade shocks, but convert them into unexpected advantages. At the same time, the global trading system continued to evolve. Tariff battles, supply chain disruptions, climate pressures, and shifting alliances created an environment where certainty was increasingly rare. South Africa's performance became a case study for business schools, policy think tanks, and multinational corporations looking to understand how flexible strategies could turn risk into reward. Investors took note as well. Foreign companies began viewing South Africa as a more attractive destination for manufacturing partnerships and logistics hubs. The country's expanding global connections and strengthened export capacity made it a pivotal player in routes connecting Africa to Europe, Asia, and the Middle East. Even in markets where South Africa had previously been a minor competitor, its reputation surged as a dependable and forward-thinking exporter. The energy driving this transformation was not the absence of difficulty, but the mastery of it. The tariff shock served as the catalyst, but the victory grew from discipline, innovation, and relentless pursuit of opportunity. Exporters learned to view the world not as a collection of closed doors, but as a shifting landscape filled with windows that appeared only to those who looked for them. As global trade analysts unpacked the details, they began identifying patterns. South Africa's willingness to invest early in supply chain resilience, its push into new markets, its focus on sustainability, and its embrace of technology all contributed to the $1.3 billion surge. The narrative that emerged was not merely one of overcoming adversity, but of redefining what was possible for mid-sized economies navigating a system dominated by larger powers. And yet, the story remains unfinished. South Africa's success has introduced new expectations, new responsibilities, and new opportunities. With its export profile elevated and its global influence rising, the country stands at a pivotal moment. The question now is not whether South Africa can respond to global challenges, but how far it can push its advantage in a world where economic landscapes shift as quickly as the currents of the oceans that carry its goods abroad. For now, the message is unmistakable. In a year of uncertainty, South Africa delivered a masterclass in resilience. Against the backdrop of rising tariffs and tightening markets, it forged new paths, deepened its alliances, and emerged not weakened but transformed. What began as a trade shock ended as a strategic victory. A $1.3 billion reminder that strength is not defined by the absence of obstacles, but by the ability to turn those obstacles into momentum. This is South Africa's moment, carved not from ease but from pressure, shaped not by protection but by perseverance. And as the world watches the next chapter unfold, one truth is becoming increasingly clear. Global trade may be unpredictable, but in that uncertainty, South Africa has found its power. The impact of this shift also extends into the psychology of the global market. When a country defies expectations this dramatically, it changes how investors, competitors, and trade partners perceive its capabilities. South Africa, once viewed primarily through the lens of its regional role, now stands as a symbol of adaptive strategy on the world stage. Its companies demonstrated that size does not dictate success, strategic insight does. They showed that in a world defined by volatility, readiness and decisive action can outmatch even the toughest external pressures. More intriguing still is how this trade triumph has reinvigorated discussions about Africa's place in the global economy. With South Africa leading by example, other nations across the continent have begun analyzing their own vulnerabilities and potential leverage points. The event sparked conversations about regional supply chains powerful enough to rival traditional trade routes dominated by major economies. The idea of an interconnected African export network, once theoretical, is now seen as a realistic path toward greater global influence. As South Africa continues building on its momentum, the ripple effects are being felt in shipping corridors, warehousing hubs, commodity markets, and digital trade platforms. Freight companies are revising their expectations. Trade ports are reporting increased activity. Logistics providers are expanding capacity to meet growing demand. The transformation is not confined to boardrooms or policy meetings. It is unfolding in real-time infrastructure and evolving market behavior. The story also highlights the importance of trust in international trade. Buyers across Europe, Asia, and the Middle East have responded positively not only because of competitive pricing, but because South African companies have delivered on their promises even under pressure. That reliability has become one of the country's most valuable export qualities, a differentiator that cannot be replicated overnight. In many ways, the crisis created clarity. It revealed which sectors were ready to expand, which markets were underexplored, and which strategies carried the greatest long-term potential. Companies that had once been hesitant to pivot now operate with a renewed sense of vision. And as they refine their global outreach, South Africa's trade landscape continues to evolve in ways few could have imagined at the outset of the tariff conflict. Looking ahead, the significance of the $1.3 billion export surge will resonate for years. It will influence future negotiations, inspire new investments, and reshape how countries engage with South Africa as a trade partner. The victory stands as both a financial milestone and a strategic awakening, a reminder that in the high-stakes world of global trade, breakthroughs often emerge from the moments of greatest uncertainty. As global markets shift, South Africa's response shows how innovation and strategic vision can transform challenges into lasting advantages and inspire broader economic resilience worldwide for many nations.